Hi, this is Michael Waits, and welcome back to Insurance for the New Possible, a Chubb conversation. We are joined today by Sir Young, Insurance Solutions Lead at ByteDance, and Michael McLeod, Senior Manager, Consumer Partnerships Asia Pacific at Chubb. Gentlemen, before we get into the main part of this conversation, let's get a little bit of both of your backgrounds for some contents. And Sir Young, let's start with you.
Sure. Thanks for having me.
You're welcome.
All right. So I've been looking at insurance for a good 7 to 8 years.
Oh, wow.
Focused very much on the digital aspect of insurance, both the life insurance and the general insurance. I think what is pretty unique about myself versus other team members and folks in insurance is that I've always looked at the crossroads of insurance and digital platforms, right? Looking at how to distribute insurance on various internet platforms and different internet scenarios, right? Like e-commerce, mobile wallets, telcos. And I think over the years, I've had an amazing opportunity to try to create new innovative products and distribution models to distribute insurance across different domains. And I think that has been pretty exciting, and that extends to what I'm doing today in my current role at ByteDance.
That's going to be super interesting. Go ahead.
Glad to be here. So I actually found out this morning, today is to the day my 14th anniversary in insurance. So that's a pretty terrifying realization, I would say. But no, so my background, I started off my career in an underwriting role, underwriting property and casualty lines back in Sydney, Australia. As things progressed, I changed company, moved into accident and health related underwriting. I had the opportunity to move to Singapore with Chubb at the beginning of 2019. Moved through a number of roles, analytics, and most recently focused on partnership business development. So working with partners across fintech, across telco, across mobility, to really collaborate and design very robust solutions for insurance distribution through our partners' environments.
Yeah, I mean, I would say if the claims is where the rubber hits the road, and tell me where I'm wrong here for insurance, that the underwriting is where the rubber gets created, if that makes sense. So it's just kind of cool that you've had that experience first before you get into all these other roles, because then you can understand what an underwriter's doing, where the risks are, and how those risks get mitigated, all the way up to product creation.
Yeah, definitely. Cool. It can be a bit of a blessing and a curse, because sometimes you get some of the requests or some of the asks, or you really do want to do something creative, but then there's, in the back of your mind, you are very cognizant of the fact that there are some things that potentially can't be done or shouldn't be done.
Got it.
And there's our special power.
That's your special power. So let's do this. You've been in insurance for a while as well, but insurance has traditionally been seen as a necessity. This thing is necessary, but not particularly exciting product per se, right? How do you think the industry can shift that perception and make insurance something consumers want to buy, not something they feel like they need to buy?
Yeah, I think that's a great question. So I think the objective here really isn't about making insurance so sexy that customers will wake up one day wanting to make a purchase of insurance and feeling so happy about it. But without going to the extreme end, at least I think what we can do is to make sure that the customers feel more motivated about purchasing insurance and can see the value of that purchase in a more apparent way, right? And so the way I think of this is, for a lot of customers, the value of insurance really is being realized at the point of claims, right? And I think in the industry, a lot of times we have been focused around how do we provide a better claims experience. Yep. The problem with that is that at any one point in time, there are only so few customers that ever experience claims.
That are making a claim, yeah.
Exactly. And what happens if you purchase an insurance and you never get a claim, right? As by definition, from a customer's perspective, I saw no value, right? You can argue that the value comes in the form of peace of mind, protection, but these are a lot more, I would call it as effects that
just intangible, less tangible.
Exactly, right? So I think whilst I believe and I agree that the claims experience is truly important to the value proposition and the appeal of insurance, I think we need to do more than just claims, right? And so one of the thought process is how do we bring forward the value proposition of insurance to perhaps at the point of purchase or shortly after purchase, right? Help the customer realize bite-sized rewards or value proposition that they can unlock when they make those insurance purchase, rather than waiting all the way till the end of the for claims before they start to experience something like that. And if you think about it, a lot of insurance companies have a multi-year relationship with their policy holders.
For sure.
Right? And
sometimes decades.
Exactly. And sometimes decades, and I never ever get to claim anything, then that whole relationship almost felt like nothing from the customer's perspective.
I don't know. If I have fire insurance and my house never burns down, I am super happy.
On the other hand, you're still not over the moon when you get your renewal notice every year and the premium goes up. It's a fact of life.
Yeah, fair enough. But so can I ask you, he's suggesting like little bite-sized things along the way in between the purchase and maybe the claim or the non-existent claim. What can some of those bite-sized things look like?
I think we've got a really solid foundation of the new world, that being sort of the micro insurance, the embedded insurance, lays a very solid foundation. I think we need to consider insurance. And so, Yang, you touched on value, you touched on themes around access and usability. We, as Chubb, we collaborate with partners all the time. And I think co-design is critical here. How can we come up with a solution that sure is supported by insurance principles, but is synergistic with our partners' ecosystem and the interactions our partners are having with their customers?
So it doesn't look like insurance per se.
Exactly.
Go ahead.
And there is a value chain, don't get me wrong,
Yep.
Because we do need to move up that value chain to the more robust, the more comprehensive products. There are inherent challenges there, and we might touch on some of those themes later.
Yeah.
But if I think about something like booking a ride-hailing trip, as an example, the main thing I'm worried about on that is, of course, a delay, or a thing that really grinds my gears is cancellation.
Oh my God.
How can we...
Happened to me yesterday.
Exactly.
Yeah.
How can we incorporate a solution there, whether subscription-based or transactional, that mitigates those pain points? And then you supplement that with one of the buzzwords over the last few years, of course, parametric solutions that give real-time benefit with no call to action, immediate payment. They immediately see the value.
Yeah, I'll just add on. I mean, first of all, I wholeheartedly agree with what Mike have just said. I will add on 2 points I think is really important. When we look at value and bite-sized rewards for the customers in a more upfront manner,
Right.
2 ways to think about it from my perspective. Number one is when Mike talk about working with the ecosystem and build and tailor-made the solution, a lot of these bite-sized rewards can come in the form of the ecosystem rewards and play along with the whole structure. So, for example, right, if you embed a product protection on the e-commerce platform, right, and when you make that purchase, could you then right after that provide a free shipping on the next order for the customer, right? And this is kind of a powerful tool because, first of all, the customers get immediate reward on purchase of an insurance.
So if I buy the insurance, I get free shipping
for the next order.
For the next order, not for the next one.
Order. And that is a very important mechanism because the next order means you must place a second order.
So there's loyalty then to the platform.
That's right.
Who pays for that though?
So it can be a commercial arrangement. Ultimately, between the platform as well as the insurance companies, something can be worked out. But that is a win-win for all. It's a win definitely for the customer. It's a win for the platform because I have a repeat purchase that's pending. And the insurance gets that proposition and engagement as well.
So do you think there's a situation where that happens? And I'm like, wow, I didn't know that I could, if I bought insurance for this, right, some kind of protection, my next order I get free shipping. And then I tell my friend or my wife or my daughter that that's the case. Do you see that happening and it's spreading by word of mouth that way?
I think it's very possible. I don't think this is something that will go viral per se in terms of the virality, but it definitely helps to add on to the platform's proposition.
And I think, the whole concept around social proof definitely is applicable, but I think that really gains momentum when there's return. Right?
Yeah.
Immediate return either of the core insurance solution or on the benefits that are provided via the ecosystem. It's really results driven where that gets momentum, where that gets traction. Whether or not insurance would ever go viral in a positive sense is yet to be seen, but I think that's where you'll really see momentum.
Do you think, so some of these big platforms, right, have really figured out like how to get engagement, real customer engagement. And again, I've had this conversation a lot, but something somebody said to me still sticks with me. Like you do your banking every day, whether you're reconciling your statement is not the case, but you're either taking money out, putting money in, scanning stuff, paying for things every day. So you have some kind of relationship with your bank every day, but insurance, not so much. Is there a way to build little interim points of engagement as well? And is there something to learn from the e-commerce platforms and other engagement platforms where they've really figured out engagement?
Yeah, very tough question, right?
Yeah,
So,
because they're not the same things, but there's got to be something you've learned over here that can be applicable over here.
Yeah, definitely. I think there are many ways to slice this. If you look at, if I were to slice an insurance business into micro insurance that you typically embed versus the other like standalone health accident insurance,
Right.
For the latter, I think some partners in the industry have proven that they are able to maintain an ongoing engagement. So if you look at the Vitality program, right, that is one of, I think, the classic good example that we see in the industry, where after purchasing a life policy, I'm able to engage the customers. The customers can engage with the insurance company on an ongoing basis and get rewarded. And I think that's obviously good for the customers, but it is good for the insurer as well for two reasons. The first reason is the fact that you are able to collect a ton of data from the customer, and that really helps with your future underwriting.
Right.
The second reason, I think the more immediate short-term reason and benefit is that you get tons of touch points with the customers, and that really helps you to identify the right timing, the right product and opportunity to upsell and recommend products to the customer. So I think that part has been done successfully on the life insurance side. I think we need to figure out how to do this with general insurance.
So for general insurance, what needs to change internally, if you know what I mean? Like, I don't want to say staffing per se, but like what structurally needs to change? Because right now, if you're not set up for all this engagement, all these individual touch points and all this data gathering, what needs to change structurally internally to be able to say, now we can handle all of this?
I don't know if it's necessarily structural changes as such. I mean, we've had the benefit of being on this journey for 8 years or so now in terms of that. It's not digital transformation as such, but really considering the new world
building out
of
this really big digital business,
distribution. Yeah, exactly.
Yeah.
So I don't think it's necessarily structural changes. I mean, of course, more resource always helps. There's a big focus for us internally, or even more of a focus, I should say now, on data analytics and how we can utilize that data. But the example you raised around the frequency of engagement you have with your bank, I think that just comes with inherent trust. And I think if you think about a bank, a customer is trusting their bank with their financial security. If you think about purchasing an airline or a flight ticket with an airline, you're trusting that airline with your life.
Yeah.
If you're booking a ride-hailing trip, you're trusting that organization with your safety and with your schedule. And I think in terms of that shift, we as a company and as an industry really need to collaborate with our partners to piggyback that trust. I think it's through that collaboration with our partners and piggybacking that trust where we can really construct different solutions, view it in a different way. The touch points that our partners have are always going to be exponentially stronger given that trust dynamic that customers have with the partners we're engaging with. How can we supplement that? How can we use the data that's generated through those touch points to do targeted marketing of what is essentially hyper-personalized product offers further up the value chain?
Yeah, and I think the way to think of the word engagement here with digital distribution partners can be interpreted a little bit differently, right? So obviously, if you look at Vitality program, there is a ongoing proactive engagement that is going on between the insurer as well as the policyholders. But when you talk about digital distribution platforms working with insurer, the touch point and engagement can come by the various scenarios that the platform themselves already have with the customers.
Right.
So you earlier mentioned, right, the banks, the e-commerce, they have already tons of engagement and touch point. So right on it. And the way I think of engagement for insurance here is finding those touch points where insurance becomes relevant and prompt them and customize product that you can engage those customers at the various touch points.
Right. So can I ask both of you this? Because I think this is really interesting. We talk a lot about platform companies. And I think for the most part, we're thinking about ride hailing, right? Like, what if the guy's late? What if he just doesn't show up? What if he cancels, right? I was going to the airport recently and 2 guys canceled on me. And it's super frustrating, right? Because I need to make it on time. So we think about this a lot in the context of e-commerce as well. But how about like gaming or entertainment? And in a way, entertainment is merging at some level with e-commerce, particularly in Asia. Where does the embedded insurance product or just regular insurance product fit into those scenarios, those platforms?
Funny you mentioned gaming, because I remember a couple of years back, the industry was really trying to innovate and be creative with gaming.
Can I give you an example of just what I'm thinking?
Go ahead.
Let's say I'm playing a game and I receive something that I've been trying to get for like months, right? Some object that I've been trying to go for. Right, and I'm sitting there, and it's like dinner time, and my mom comes over and goes, "Hey, it's time for dinner," and boom, that thing disappears. But I could have insured it virtually, and if it then disappears, I'm covered. Does that make sense? Is that not a thing that could happen?
Well, going along that train of thought, I think today in gaming we do see a lot of scams, right? And I think in terms of account takeover, in terms because people, the hardcore gamers, they actually spend a lot of money on the skins, on the gadgets. You put in all those monies, and sometimes your account get hacked, and everything goes away. So there is a real financial a need for financial protection there, and that could be one of the ways to consider. But I mean, I think the industry has been quite creative in this space, and I think it is still to be seen how successful it gets.
You mean the insurance industry, the gaming industry?
The insurance industry is trying to be creative in the whole gaming space. I recall a couple of years back, people were suggesting things like, you play the game and you injure your thumb.
Carpal tunnel.
And you insure the thumb against I mean, these are creative, but.
I don't know. I worked at Goldman Sachs and Morgan Stanley for 20-something years, and I'll tell you at the end, I really wish I'd had insurance, because at some point I literally had to go to my boss and say, I can't do this alone anymore, because my arm just physically is not functioning. So gaming is no different, really.
Exactly. But I think gaming, I think, is tricky, and I think it's still evolving. But you talk about entertainment, right? And I think that is a really interesting space, because if the way I look at it is the social media platforms and digital entertainment platforms, they actually, first of all, have tons of information and data of the customer. What that does, actually, as far as insurance is concerned, is you're able to really have a unique profiling of the customer. And this profiling is it can be quite specific to insurance. So, for example, right, sometimes, for example, customers may be browsing videos that is specific to financial topic. They may look at bank credit cards, they may look at insurance.
Rental properties.
Exactly.
Whatever it is.
And those are what I would consider as very mature leads, right? They have the intent and they're really looking for it. And those are ready for conversion. So I think targeting, in terms of leads generation and targeting of the customers on digital entertainment platforms can be pretty powerful.
Can I ask both of you this, though? Because I'm not an expert at this. If I'm on a real estate portal, right, and everybody knows that I'm there, however they track that, right? And then I go from there, I'm thinking, but I don't know if I can afford it from a mortgage perspective, or like, what's my IRR going to be? So then I go to some video platform where I can ask them the question and learn about all that stuff, right? That is a really intentional lead, because then if I go buy that, and then if I go look at the mortgage rate somewhere, now you're seeing me thinking, he's not just looking at real estate. He's not just trying to figure out if he can afford it. He's trying to find out if he can actually get that rate. Right? So now you have a potential lead for rental or purchase insurance, all this kind of stuff. Is that the way this works?
Yeah, no, I think that's a very good point. If you believe the future is one where actually many consumers shift their behavior into searching and asking on chatbots, on generative AI, like your agentic AI chatbots, if that is the future, then the ability for those AI chatbots to then identify those intent and promote relevant products, it can become very powerful.
I think there's a few really cool themes that we could touch on here. The wealth of data, right, really lends itself to the hyper-personalization I touched on briefly before. How can we use the data that's available through our partners' customer interactions to identify what their priorities are? What are their priorities? What are they concerned about? What are they interested in? And then you look at lifestyle indicators or behavioral indicators, whether that be by virtue of transactional interactions or content views. You figure out the point in time at which a particular cover is most relevant, and then collaborating with the partner and drawing on the partner's ecosystem, you develop copywriting messages that frames those products, those insurance products, in a way that's directly relevant to that sort of single customer view. You're chuckling at something.
No, because I have this idea in my head, and I'm smiling because I'm just thinking he's talking about agentic stuff, and you're giving me some ideas. But go ahead. I'm smiling because it makes me happy. We talked about this before we started recording. You're like, I think insurance is super interesting, and I think the opportunities are huge. And I think one of the reasons why this conversation is so interesting to me is because we talked about this. You went from underwriting, right, to partnerships and across the value chain before that, and you went from insurance to platforms. So there's like this meeting in the middle of, I know what it looks like from the platform side. I think I want to interact with the platforms and all these ideas that I'm thinking, I'm not on either one of them, so I can do a whole bunch of consolidation. That's why I was smiling.
You're coming from a user perspective.
Yeah, as well. And I can go through that too. Sorry, go ahead.
Yeah, no, the other point I wanted to touch on, you consider Asia as a market, right? Financial literacy in Asia is lagging behind the more developed world. Certainly there are pockets or markets where it's greater, and then there are those that are dramatically lower. And I think through this platform interaction, we've got an ability to really sort of drive that. You've got an emerging middle class. With that emerging middle class, yes, comes greater buying power, comes greater opportunity, but the risks in those scenarios also increase commensurately. So how can we leverage platforms, whether they be media platforms, commerce platforms, mobility platforms? How can we leverage those platforms to really drive financial literacy across the market, and at the same time, through those touch points, recommend or position products that are hyper relevant?
Yeah, I think financial literacy and financial access, right? Because for a lot of the customers, this is the very first time and the only channel they get access to an insurance product.
Right. It's the first time they're seeing it. So the reason why I was smiling was because of this. You have all this data, and you mentioned agentic, right? So maybe you can help me address this. Agentic AI. And you talked about hyper-personalization. And if you kind of merge those two things together and say, here's all the data that we have on Michael. Here are the things that we know, and here's some of the activity that we've seen him do. It seems pretty clear to me that he's intending to do X. So then if you feed that data into an agentic AI, they can then send something hyper-personalized to me that then says, without being creepy, right? But then says, it may be the case that you want to consider doing this thing in the insurance space to help you get protection from this thing, right? And that is super cool, because then if I say yes, well, then I can have a hybrid experience and get on the phone with an agent or somebody else to then explain to me in deeper, right? But that was not possible until yesterday. I mean, relatively yesterday.
Yeah, Sorry. No, 100% agree with you. I think the possibility there, we are just scratching the surface today, right? I think the industry will evolve quite rapidly in terms of how we leverage on agentic AI. But I would say that it is not without challenges, right? I think there are a couple of things that needs to be resolved. So first and foremost, if you're going to sell an insurance product through agentic AI, the insurance product itself needs some redesigning, right? In terms of, because different platforms have different user profile and different propensity to consume. So you need to look at your product design.
But isn't that the hyper personalization? Sorry, go ahead.
Yeah, you can think of hyper personalization from a couple of angles. One is personalizing what product I recommend you, right? Yeah. The other way to think of it is let's say fire insurance. If I'm going to recommend you a fire insurance, is it going to be the same product as I recommend the other person fire insurance? That could be different.
Hopefully not.
Yeah, exactly, right. So you need to look at that. And as far as the product is concerned, you also probably want to redesign the underwriting process. So for example, in order for you to effectively convert through agentic AI, you probably want to reduce or perhaps even eliminate the need for KYC. Or if you need to consider from a KYC perspective, how do you look at the point at which you need to do that? Can you do it after purchase, or can you totally eliminate, or must you do it at the very point of purchase? Because these are things that would impact greatly your conversion through agentic AI.
Well, sure, because that was one of the other things I was going to ask you is how do you create these experiences and Martin and I talk about this all the time about friction. How do you remove friction? Right? Because you could have this incredibly great product and having a really great experience, and then be like, oh, but I can't do that because I haven't done KYC yet.
Exactly.
Ugh, I'm going to go home.
Yeah.
Right? So, but how do you build that?
I think for the most part, it's an iterative exercise. I think we have a lot of partnerships. A partnership is never one and done.
No.
I think you need to base refinements and optimization strategies on live data. And of course, I think streamlining operations and distribution is critical, but I think that needs to be founded in reality. There are some practicalities that certainly in the immediate future can't be done away with. I think a lot of this hinges on the wealth, the accuracy, and the integrity of the data. I'm thinking about this to a degree from my underwriting.
I can feel it.
Yeah, but I mean, you take fire insurance again as an example. I mean, there are some fundamental elements that we need to know there as an insurer to price that risk. Sure. What's it made of? Where is it?
What's next to you?
What's next to you? Exactly. Elements like that in the current world, as it stands, can't necessarily be done away with, and that adds friction to that application process. But as we move through this world and progress on this journey, those data sets will become available. You see a world where we've got a single customer view across all of these platforms, right? Where based on behavioral indicators, transactional indicators, we can draw information, either direct information per that customer's needs or proxy information with assumptions, and you put guardrails around those exercises, that could be a progression point.
Do you think agentic AI can also be used, not on the underwriting side per se, but on the KYC side? Right, and because it's so fast, this is what I mean about a great user experience. I'll put it this way. I had to pay my health insurance this year, again, right? It's fine. My insurer's good. It's a reasonable price, and the coverage is fine for me. It's perfectly fine. But I forgot to do it, right? Because the only thing I got from them was a message on a platform that I don't use. So my agent called me, but the process to do it was really clunky.
Yep.
Really clunky. And in the end, it took like an hour we were doing it over a video call, and it took like an hour to do. And I was super relieved.
To pay your health insurance?
Yeah.
It took an hour.
Yeah. Yeah.
That's wild.
Yeah, that's what I mean when I say so. And otherwise, I live this like completely frictionless life. I'm not kidding.
You have a good life.
Yeah, it takes a while to build it, but it's not bad. But the point is that the friction, I think, is one of the reasons why it took me so long to pay, because I was like, oh, then when I finally saw the message, I'm like, this is going to be hard. I'll do it tomorrow.
Yeah, I would say, definitely agentic AI is able to solve the pain point, but today, to be honest, we can solve the pain point already. It doesn't take rocket science to do it. The problem is, and that applies to today and in the future with agentic AI, is if the information is not available, there's nothing any technology can do for you, right? So if the information is existing today, we have the existing technology to automate a lot of these things, right? I think it is upon the insurance company to really improve on. I would consider this in the bucket of automation rather than agentic AI.
Mm-hmm. Oh, I'd agree with that. I think there is work that needs to be done on the operational processes that sit behind this. And we touched earlier on the themes of access, and what comes from that access is evidencing the value of the products these customers are buying, either one over one or every year in the case of renewable policies. There is a lot of work that needs to be done there. And I think, as I said, we're taking steps towards that as an industry. One of the ways, again, and I feel like I'm harping this point, but can we leverage our partners' infrastructure? So you touched on health insurance, and that's via an agent, and that is a very traditional element of our industry. Yep. But if you think about a social media platform, how can we enable our agents via social media platforms to put out content that is educational around these processes, or even from a live streaming standpoint, providing access to, I guess, closing those gaps.
So this is the other thing that I want to cover. We talked about entertainment, and I said earlier how entertainment is merging with commerce, right? Because this idea of live streaming commerce, particularly in Asia, is not small.
Yeah.
And I don't think it's going to go away. Some people had thought it was a fad a couple of years ago, but I think actually more and more people are going to do this, because it's almost like, and you two are probably too young to remember this, but it's almost like QVC, or some kind of online television shopping, but just at massive scale. Mm-hmm. And one of the things they would do on these shows, I didn't watch them to buy anything, but you knew they were there, was they would kind of inform you of how to do it. And I think that if you're going to now embed insurance in these products, I'm curious how, whether it's an individual live streamer or a group of live streaming or a show that's just live streaming, can then fix some of these problems about knowledge and literacy. What do you think?
No, I absolutely agree.
You know what I mean? Can I give you a little bit of an example first? In other words, I'm live streaming, I'm selling you something, and then I can say, and if you're concerned about protection for this product, if it's really important to you, blah, blah, blah. Sorry.
No, for sure. So first of all, I just want to address the difference between live streaming and QVC, right?
Yeah, no, well, of course. It's like generations different.
Yeah, no, but I think the fundamental of two things are pretty similar. But I think the way I look at it, the key difference besides the scale of it is the very fact that you have a two-way communication.
Yeah, so that's a great example.
Right, the engagement, the ability for the customers to ask questions on the spot and have the feedback being heard and showcased on the spot.
Right, so here's how you do this, but I can actually type into a chat or actually ask, wait, can you say that again? Kind of thing.
Exactly. And sometimes, for example, if you're buying a piece of clothes, you can say, how does it look on you? Or like, can I just look at different colors? So I think that engagement is what makes live streaming such a powerful tool, and it wouldn't go away because this medium of engagement can't be really replicated in other channels.
Right.
So I think on that note, right, I think the example they talk about is absolutely valid. So when we look at embedding insurance into live streaming, right, we are able to, have the creator, the host, talk a little bit about what this insurance is. And I think one thing we need to take note is live streaming has a two-way conversation, right? So they can make it simple in terms of explaining what insurance is, and the customers may ask questions, right? In the chat, and they can address it. And I think that's powerful in building awareness, in building understanding of what the insurance does. But I would have to caveat that there's a lot of challenge here, right? A lot of challenge, but I think the industry is at the start of this. We can resolve it over time. But the challenge is, one of the most obvious is compliance challenge, right?
I can tell you 10 of them, but go ahead. Yeah, compliance is a big deal, right? Because as a live streamer, I may say something that's not kind of legal to say.
Exactly. And where do you draw the line in terms of who needs to be the one that owns the license in order for me to talk about this? Is it the creator? Yeah. Is it the seller? Is it the platform? I think there is a lot of gray in the region that we need to address this. I am confident that the market will sort things out itself, right? But I think that's one area. I think the other area is really important to note as well is what makes live stream very successful are engagement, incentives, and discounts. Meaning to say, if you were to distribute insurance through live stream, just plain vanilla, just simply having the creator explain and answer your questions on insurance will not be enough for you to drive scale. You need to consider how are you able to engage them through discounts, through giveaways, etc. I think that's a very important element.
One other way to view that as well, right? I completely agree. I think incentivizing always helps.
Yeah.
We've mentioned it before, but insurance is oftentimes a grudge purchase. But then if we go back to the themes of data, right, and being targeted, because if you're promoting car insurance,
right,
when someone's auto insurance isn't up for renewal,
or I don't own a car, so what's the point?
What's the point?
Yeah.
Exactly. But if there are indicators we have through our partners' ecosystems or our awareness of a customer that says this product is relevant at this time, and we can supplement that or market that through live streaming at the right time, then maybe that reduces the need to incentivize behaviors.
So is there a way that insurers and pricing insurance can learn something from like the travel companies, the platforms, in the sense of creating, because the one word you left out, what did you say? Incentives, discounts, and engagement.
Engagement, yeah.
How about urgency? Mm-hmm. Right? Like if you buy by the end of February, you get a 10% discount on your premium or something like that, right? Or even you just bought a wedding dress. That means you're going to a wedding. Mm-hmm. You don't want anything to happen to that wedding dress, on the way there, because what happens then, right? So all these little things that the online travel agencies do, the OTAs do, is there a way to build that into insurance, or do the regulations say you can't create urgency?
Yeah, I'll let Mike answer that, but I'll just highlight one thing, right? So the mechanism that you talk about, like for example, by end of the purchase, by the end of the month, you get certain things. When you have such a long lead time to consider.
Yeah, not by the end of the month. I just use that.
No, I know, right? But the general principle. A lot of other mechanisms will work, but not specifically around, for example, a live stream environment. So I think the mechanism and the business model needs to be highly dependent and customized based on the channel at which you're reaching out to the customer, right? So live stream has a very unique way of operating, and if you're leveraging on other things like social media posts or videos, that's another way of engaging customers. So I think that will have to adapt.
Yeah, I mean, when you boil those initiatives down, they're just digital marketing strategies.
Yeah,
right. They're certainly applicable, and you're right. There's regulatory controls around what can and can't be done, right, incentivization, etc. And I think part of what we bring to the table in this regard is really mapping that out for our partners and getting clear that the solutions are compliant, but it's very nuanced. And I think that's why we view every opportunity as a collaborative exercise. We co-design based on what's appropriate, what's possible. It's very rarely, if ever, a one-size-fits-all.
Yeah.
For sure. So we talked a little bit about the regulatory stuff, and again, my mind is always filled with little ideas, right? Is there a way to differentiate from a live streaming or an online commerce perspective by actually making the person who's doing the live stream actually get a license?
Or enabling existing agents.
Yeah, or existing. That's the reverse, right? You take an agent and say, you should live stream this stuff. Or vice versa, taking somebody who's live streaming and say, become an agent. Because it could change the way your commerce business works, no?
Yeah, no, absolutely. Today, if you look at a lot of insurance agents across Southeast Asia, a lot of them are already engaging on social media. They are doing their own live streaming, But I think there has been an awakening in terms of how do you reach out to more customers. I think today what is lacking is a lot of these are just residing at the lead generation stage. Can we make it even more seamless, right? Think about it, right? If you are able to, in a live stream session, not only engage those potential leads, but allow them to convert a hospitalization plan on the spot, you are reaching out to so many more customers than you have to meet them individually. And I think that's something that as an industry, we need to get there. And I think regulatory clarity would definitely help.
And I'd extend on that to say it's not just regulatory clarity, but there does need to be regulatory security around it. There's regulation is based on, there are reasons behind the regulations, right? There's each individual's customers' needs are different, and that's why there is licensing around advisory functions. And I think we're not necessarily there yet, but I think it's something that as an industry and in collaboration with our partners, it's certainly something to explore. I mean, there are examples of this in China, sort of the live streaming sort of influencer-based sales of licensed agents, and there were issues there, and don't need to dive into the specifics, but we're taking the first steps towards it. But I think it would need to be a multi-company, multi-entity collaborative exercise to figure out how it works for the best outcome for customers. But I think collaboration is really important here. And that's not just collaboration between us as an insurer and
it's the whole ecosystem.
Partners. Let's engage with regulators. How can we put the customer first in these scenarios in a way that, I guess, capitalizes on the new world of access, but with the security of clear regulation, clear guardrails on how things are done. We certainly need input from those industry bodies to determine what's possible and to determine what boundaries could be pushed through that engagement or via that engagement.
I'll just add that I think for a lot of internet companies, distribution companies, one of the core philosophy that we have is, are we doing right by the customer? And I think as we collaborate in insurance and push the boundary here, I think at the very least, we should all be very conscious about that.
That is the perfect way to end. Sir Young, Insurance Solutions Lead at ByteDance, and Michael McLeod, Senior Manager, Consumer Partnerships, Asia Pacific at Chubb. Awesome. Really awesome. Thank you both very much.
Thanks for having us.